obviously there's a lot going on in the world this year, 2020, and obviously with the pandemic going on, there are some companies that have benefited, some haven't. So what has your experience been like this year? Because this year it's like all rules are thrown out the window. We're starting
Right.
over. So
In some ways, whenever there's a crisis like this, I mean, this crisis is different compared to many other events. But whenever there's a downturn in the economy or some particular industry sector is getting hit for whatever reason, lots of the fluff in the industry goes away.
mm,
In fact, when we were running our business guidance back in the software, in the dot-com glory days, I mean, I hate to say it, but we had 200 people, but not all 200 were at the top of their game because we
right,
couldn't find good people. And so we just have to hire kind of the second tier candidates
right.
because we just couldn't find anyone else. So as a result, when there's a difficult time, those are the people you cut back on first, the people who kind of are your second tier, and you try to keep your best people. So in that sense, just like that, in a crisis, say in the COVID situation, some of the companies that are stronger will survive. So companies that were more fluff and lots of just talk, they will just die. So essentially, the companies that are left over are the ones that maybe they're still struggling because of the economy, but they're the ones that were stronger to start with. And also, they're the ones that are going to survive later on. So essentially, you've gotten a natural filter.
Fantastic. That's such a great way to look at it, that this is, we can benefit from this, and maybe benefit is too big of a word, but at least we can see, we can, as you said, we can cut out the fluff and we can focus on
Right.
on companies and people that are really adding value.
And also, it's a possibility that because of the situation, the valuation you might get might be a little bit better. Um, but it also means that the company is going to struggle a little bit. Whatever projections they had for 2020 might go down to maybe a year or two from now. And the economy is struggling, so the amount of sales or profit is going to be lower as well. So in that sense, that kind of is the rationale for a lower valuation. But again, you've got a better chance of success, assuming that the retraction or the whatever happened is temporary. It's not going to last forever.
Right. So let's talk about valuation a little bit more, because I think that's a really interesting challenge that a lot of people are struggling with right now. Some companies' valuations have cratered because the demand has disappeared. They're not able to close the contracts that they had. But on the other hand, some companies have sort of skyrocketed. If you had telehealth anywhere in your business plan, you're sort of, you can charge 10x now because that industry is booming. So beyond just actually looking at the numbers and seeing how much revenue a company has, or how much traction they're able to get, do you give that kind of a benefit to any particular company just because of the market environment?
The valuation of, especially in the startup environment, has nothing to do with the numbers. I mean,